All right, and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. Thank you so much for joining. We're about to get started. If you have questions or topics you wish to discuss, please chat those over. All right, the presentation is being provided for educational purposes only, should not be construed as tax, legal, or investment advice, nor is a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So we'll spend just a few brief moments going over foundational content. First of all, resources. You can always find us on our community 24/7. You can post in the forums. You can access our library of videos and webinars. It's always free to join. All are welcome. You can find it at mysolo401k.net/my-community. We host these daily webinars twice per day, once at 10 a.m. Pacific, and again, 10 a.m. Pacific, 1 p.m. Eastern, and then a second one at 1 p.m. Pacific, 4 p.m. Eastern. You can always find the links at mysolo401k.net/webinar. If you can't join the live session, you can also just submit your email, and then you'll get access to the recording after the fact. When we go live on YouTube, you can post questions if you're there now, for example. Now, like I mentioned, I want to go to some foundational content here. So let's talk about eligibility, and then we'll talk about the 2025 super catch-up contribution limits. So eligibility, really a 401k is for an employer. So I think it could be like a big corporation, right? Similar to that, a solo 401k is for a self-employed individual. So you still have to have that self-employer, in this case, self-employed requirement, but it's specifically for an owner-only business. So there cannot be any non-owner full-time W-2 employees really working for any business owned by such person or a spouse, if any. Now, examples of businesses that would qualify really run the gamut. I mean, there's thousands of possibilities, as you might imagine, but popular options might be professionals, right? Could be a medical professional who gets paid as an independent contractor. Could be an attorney who has their own business. Could be a CPA, could be a realtor, right? The key is that the individual has earned self-employment income, and there are no non-owner, non-spouse, full-time W-2 employees. So with that stated, the individual doesn't have to have a formal legal entity to be eligible. For example, we have many customers who operate as sole proprietors, and that's fine. Of course, if they do have an entity, that works also. For example, they may have an S Corp or an LLC. Ultimately, what's needed is reporting earned self-employment income. So you can't set up a solo 401k if you only have W-2 wages from a job, or if you only have investment income. You got to have earned income. So examples of earned income, earned self-employment income, are going to include income reported on Schedule C of your 1040. For example, if your business is taxed as a sole proprietorship. W-2 wages, for example, if your business is taxed as an S Corp. Now, there's no minimum amount of earned self-employment income that you would need to be eligible to set up a plan. But if your goal is to be able to make solo 401k contributions, your ability to contribute is going to be a function of your earned self-employment income. because you can't save more than you earn. So if you don't have a relatively high amount of earned self-employment income, you would still be able to set up a plan, but you might not be able to contribute a relatively high amount to the solo 401k. Your spouse or business partner may participate in the solo 401k if your spouse or business partner is reporting their own earned self-employment income. For example, if they have their own Schedule C, or if they also receive W-2 wages from the business taxes and S Corp. Now, it's possible to have a solo 401k even if you have a day job, right? If you have a side business, a side hustle. Again, if you're reporting earned self-employment income with no employees working for any business owned by you or a spouse, if any, then you could set up a solo 401k. Even if you're participating in your 401k that you might have at your day job, that's not going to prevent or preclude you from being able to set up a solo 401k. So now let's jump to the 2025 super catch-up contributions, just to highlight those. So to put it in context, a solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. And so those limits will increase periodically, right? As inflation increases, right? The consumer price index increases, then the rules allow you to save more because the thinking is you'll need more when you retire. So historically, one has always been able to contribute more to a solo 401k once they reached age 50. Secure Act 2.0 introduced a new super catch-up contribution amount. So it's not in addition to, it's instead of, and it's a higher limit, which will apply for participants who are age 60, 61, 62, or 63 by the end of 2025. So for individuals in that category, they have the potential to contribute even more, right? So the overall limit increased from 2024 to 2025 for everybody from 69,000 to 70,000. The catch-up contribution, the standard catch-up contribution amount for those age 50 or older, or for older than 63, remains at $7,500. But if you're in that range of 60, 61, 62, or 63, because of Secure Act 2.0, you have the potential to contribute more. So if you have the self-employment income to justify it, and you haven't made this catch-up contribution to a different plan, like a day job plan, then you would be able to contribute potentially up to $81,250 for 2025. And here's another good chart that just kind of highlights how it's really for those that are just in that age range. So once you go above that age range, you're going to drop back down to the standard $7,500 catch-up contribution amount. So as always, again, you can find us on our community. You can find us on these webinars, mysolo401k.net/my community, mysolo401k.net/webinar, to find the links, to find the forums, to find the resources. So with that stated, let's start to bring up the questions. Thank you for taking the time to join the live session and bring questions. We appreciate that. So let's see here. One second. Again, please feel free to start chatting over those questions as we go through them all sequentially. All right. Okay. So let's see here. So we'll pull that up, and we could normally get back within a day, unless it requires a little bit of a more senior review to those support requests. So thanks for flagging that, and we'll follow up with you here shortly after the webinar. For S Corp, if my salary is $100,000, can I contribute a max $23,000 plus $25,000? If so, would that be deducted from my taxable income, which means I only pay FICA on $52,000 for my W-2? So that's a great question. It's a common question. So the answer is that your ability to contribute to the plan is based on the self-employment income. For a self-employed business that's taxed as an S corporation, that's going to be W-2 wages from your self-employed business. So if you have $100,000 of W-2 wages, you're going to be able to contribute, right? If you set up the plan, for example, on or before December 31st, so you signed up with us on or before December 31st of 2024, then you would preserve the ability to make all types of contributions for 2024 up until your self-employed business tax return deadline, including extension in 2025. So March 17th or September 15th, if you file the timely extension. So if you're under age 50, if you didn't contribute to another plan, then you'd be able to contribute 100% of your wages up to $23,000 as an employee. Plus, you can make an employer contribution of 25% of those W-2 wages. That'd be another $25,000. And actually, as a matter of fact, because our plan allows for voluntary after-tax contributions, you could even contribute the difference up to the overall limit as a voluntary after-tax contribution. Now, as far as the question around FICA, one does not have to reduce their W-2 wages. So you use box 1 of the W-2 plus any pre-tax elected deferrals, not in box 1, but over in box 12. And that is self-employment compensation. That's the amount that you use. You don't have to reduce that amount by any self-employment taxes or Medicare, FICA taxes that you would pay. But at the same time, making 401k contributions is not going to reduce your obligation to pay those taxes. Hopefully that makes sense. So you don't have to reduce it by FICA, but also making these contributions doesn't reduce the wages upon which FICA is calculated. So as a matter of fact, box 1 should be reduced by $23,000. Instead, that amount would be reported over in box 12, the $23,000 employee contribution amount. The $25,000 employer contribution amount is going to be reduced on the 1120S, the S Corp return. Hi, I just opened up my 3 accounts with Fidelity. In my dashboard, they are labeled non-prototype. Is that correct? Yes. How do I rename these to be pre-tax, Roth, after-tax? Thank you so much for the update. I'm glad you were able to get those opened up. If you look at the email that was sent, there's resources at the bottom. One of those is going to be a link to how do I identify my Fidelity accounts, which will give you more information about how to nickname them. But in short, once you log in, just click on the gears icon. You should be able to then easily just rename each account. If you haven't used any of the accounts, then you can just pick one, name it pre-tax, pick another, name it Roth, then name the last as after-tax, and just use it consistently going forward for those types of funds. For the after-tax account, do we do an immediate Roth conversion once putting money into it? I used to do this with my old employer when I was able to automate that. So there's no deadline and there's no seasoning period. In other words, you can make those contributions and then immediately move it over to the Roth. It's not automated, but you can easily do it online with a click of a mouse, or if you call the Fidelity Investment Only team, if you just Google Fidelity Investment Only, it'll bring up the main page on Fidelity's website, and there's their phone number for the team that supports these types of accounts, and they can help you move it over the phone. And then, of course, you're going to want to go onto our website. If you go to mysolo401k.net/forms and submit the online form to provide us the information that we need to prepare the 1099-R, because that move from the after-tax account to the Roth account will be reportable on a Form 1099-R. That's how we capture the information that we need to prepare the 1099-R, which we handle as part of our service for no additional charge. Final question. Now that I have the account showing up at Fidelity and sent over my old an employer 401k statement, currently at Schwab. Do I need to do anything for the rollover in those 3 accounts, or do you handle that? So we will follow up if we haven't already regarding the process to initiate that transfer from your former employer plan to the solo 401k. I've noted your email here, and I'll ping your account afterward, after this webinar, just to make sure it's in process. Or maybe we've already sent the email. It could be in your spam. Who knows? We'll take a look at that, though. Just to keep it orderly, there's no audio for the participants, but you're welcome to join. All are welcome, and chat over questions through the chat function. Thank you so much for your good participation. 1099 and contractor income with no LLC. Couple of questions. To make contributions to the solo 401k, the actual money transfer is okay if it comes from my personal bank account and not LLC, as there is no LLC. Yes, it's certainly acceptable from a solo 401k perspective to make all types of contributions from a personal or business account. We'll just CPA the account for appropriately at tax filing. Yes, so you would let the CPA know, whoever's doing the taxes, know about the contribution so they can be reported correctly on the business and or personal tax return as applicable. Recently did an in-kind SEP IRA transfer. When you roll over money from a SEP IRA to the solo 401k, it's not reportable by the plan, so customers don't need to let us know about those rollovers. Yes, again, the SEP IRA rollover is not reportable by the plan, so customers don't have to let us know about those rollovers. Can I use an offline cold storage device to store cryptocurrencies that I buy within my solo 401k? Yes. If you look at the page on our website where we talk about the McNulty decision, you can find more resources there. We need to be specifically dedicated for those solo 401k assets and stored in a safety deposit box associated with a bank account opened up in the name and EIN number of the solo 401k. Yes, it's certainly common that customers will reorganize how they operate their self-employed business, such as changing from a sole proprietor to an S Corp. That is not going to change the solo 401k investments. It's not going to change the name of the plan or the accounts. It'll be a document update. So if you go on our support page, you can click through the options and see where we talk about the option to update when your self-employed business changes, to prompt us to help you prepare those documents to update. Thank you so much for the good questions. If your business, so it depends on the type of contribution that you're looking to make and how your self-employed business is organized. So for a sole proprietor, it's still possible to set up a plan after December 31st, 2024 in 2025 and make all types of contributions. That the individual would have to set up the plan and open up the accounts in order to make all those contributions by April 15th. Otherwise, if the individual wants to make other types of contributions like employer and after tax. So the rule is specific to sole props who want to make employee contributions for 2024. If they set up the plan and open accounts to make those contributions by April 15th, they can make employee contributions. Otherwise, if the sole prop wants to make employer or after tax contributions, they would just have to open up the account in time to make those employer or after tax contributions by the business tax return deadline, including extension, right? So they could go all the way to October 15th. For other types of businesses like S Corps, C Corps, partnerships, it's not possible to set up a solo 401k and make employee contributions for 2024, but those other types of businesses could still set up a plan and make employer or voluntary after-tax contributions for 2024, as long as they set up the plan in time to make those contributions, either employer or after-tax contributions, by their business tax return deadline, including extension. So for you, it looks like you're focused on employer contributions. So regardless of how your business is taxed, there's still time. You would just have to set up the plan and open up the accounts in time to be able to make those contributions those employer contributions by the business tax return deadline, the self-employed business tax return deadline, including extension here in 2025. And would Fidelity give me trouble transferring money out to the checking account if I opened under the Roth Solo 401k LLC? I understand you're looking to open up a brokerage account in the name of an LLC owned by your Roth Solo 401k. So based on experience, a lot of these brokerage firms don't make it easy to open up a brokerage account in the name of an entity. So you need to check with Fidelity or whatever brokerage firm you want to open. So typically, if you're looking to just invest Roth Solo 401k funds in a brokerage type investment, you would just open up a brokerage account in the name of that Roth Solo 401k. You wouldn't need to have an LLC to do that. Typically, folks want to have an LLC under their Solo 401k because they're looking to maybe invest some type of alternative investment like real estate, in which case they have a bank account for their LLC. If we do help customers set up an LLC that's owned by their Solo 401k as a customer accommodation. Of course, they're welcome to use their own provider to help them open up that LLC. We just need to be a single member LLC, a brand new LLC. The sole member of the LLC is going to be the Solo 401k. The manager is going to be the Solo 401k participant. We charge $800 plus the cost as a one-time fee, plus the cost that the state charges to set up that LLC. So we're neutral as far as the platform. So it'll depend on the facts and circumstances. So for some private investments, it's made via a subscription agreement or similar document. And then the Solo 401k owner will hold those documents for safekeeping on behalf of the Solo 401k plan. They hold them as the trustee. If the investment needs to be made via a certain account at a certain platform, like a Fundrise, for example, the individual would just need to have an account opened up under the name and EIN number at that particular platform. So it'll depend on whether that platform can accommodate and allow them to open up an account under the name of the trust. All Solo 401ks are trusts. But we're totally neutral. We're happy to help try to open up an account at the particular platform. And our plan certainly allows for investing in alternative investments. If my plan is opened at a brokerage, say Fidelity, and I want to swap to Schwab, for example, what does that process look like in terms of the accounts being moved, cost, what is required from me? There's no fees on our end. Customers would just have to let us know so we can prepare the documents that Schwab requires. And then they can transfer over the cash and or assets from the pre-existing brokerage account that was previously open for their Solo 401k to the new brokerage account for the Solo 401k. It's not going to be reportable. It's not going to be taxable because it's just going from one account for the Solo 401k at one institution to another account at a different institution for the same Solo 401k. I'm a Schedule C filer and expect about $25,000 max 990 income this year, max 990 income. Please talk through how to calculate maximum I can contribute for 2025. My employee contribution is not reduced by my business expense, right? Well, so for a Schedule C filer, you have to run a pre-calculation where you take line 31 of Schedule C, which is where your net income is reported, less 1/2 of the self-employment tax, and that is considered to be self-employment compensation. So you can contribute 100% of that amount, dollar for dollar, as an employee contribution up to the employee limit, assuming you don't make any employee contributions to another plan. So in a way, the employee contribution limit is reduced by your business expense because you have to start with line 31 of Schedule C, which is your net income, and then further reduce it by 1/2 of the self-employment tax, and that's considered to be self-employment compensation. Hopefully that helps. Thank you for the good question. We appreciate it. How can I do a solo 401k Roth self-directed for backdoor Roth contribution after tax account? Well, I understand that you're looking to make Mega Backdoor Roth solo 401k contributions, which is one of the top reasons that customers set up accounts with us. So you first of all have to be eligible to set up a plan. You're self-employed. You're reporting earned self-employment income with no non-owner, non-spouse employees working for any business owned by you or a spouse, if any. In that case, you'd be eligible to set up a solo 401k. And with our plan, it certainly allows for Mega Backdoor Roth contributions. So the process is a two-step process. So you first make a voluntary after-tax contribution to a separate voluntary after-tax account before their funds are moved over to a Roth account. So the first step, the voluntary after-tax contribution, is not reportable on your personal or business tax return. The second step, to move it from the after-tax account to the Roth account, is reportable by the plan. And that's where we have an online form that we use to capture information from our customers so we can generate that 1099-R. Once the funds are in the Roth Solo 401k account, they've got that potential for tax-free growth like any funds in a Roth account. In other words, when you withdraw the money, if you withdraw it as a qualified Roth distribution, meaning you've had the account for at least 5 years and you're age 59 and a half or older, then the gains are going to be totally tax-free. Thank you for the good question. So it's very common that customers will start out with a solo 401k somewhere else and then want to upgrade to our plan. The process generally is referred to as a restatement. So the plan continues, but now it's governed by our plan documents. So that includes all of our features, all of our support, etc. So it's going to be the same cost. It's $650, which includes the $525 establishment fee plus the first $125 annual fee. Then starting 12 months later, so for example, January of next year, our $125 annual fee will be due that will cover the second year. Now, the process is going to vary for an account, a solo 401k plan that's at Rocket Dollar. You very well may already have an EIN number for the plan. So in those types of situations, if you already have accounts and an EIN number for the plan with those accounts opened up under that EIN number for the plan, typically customers would want to just keep that same EIN, keep that same name. So when they're submitting our online application, they would use the same name and then note, because you can add additional notes when you submit the application, already have EIN for solo 401k. And then the plan documents, those restatement documents, will be drafted under the same name. So they really could just keep the accounts where they are. Now, if they want our help in opening up new accounts, that's perfectly fine. We'll help them do that, of course. So that would be so the process could be pretty quick, right? Because it could be a document update in that case. And the costs are those that I just mentioned. Thank you for the good question. Circle back to my S Corp with a $100,000 W-2 question. Just want to clarify, contributing $48,000 to the solo 401k will help me save FICA on that amount. Wrong. No. Making 401k contributions does not reduce one's obligation to pay payroll tax. But you also don't have to reduce your W-2 wages by the payroll taxes. You don't have to gross those wages up to cover payroll taxes. Another follow-up question for the rollover. I'm assuming once I name those accounts of Fidelity, I would specify which accounts those would roll into, Roth to Roth, pre-tax to pre-tax. Yes, if you're rolling funds over, it would go pre-tax to pre-tax, Roth to Roth. Of course, you can't transfer a Roth IRA to any type of 401k, including a solo 401k. But if you're doing a restatement, for example, of a solo 401k at Schwab where you have both pre-tax and Roth money, then the Roth money will go to the new Roth account at Fidelity. The pre-tax money would go to the new pre-tax account at Fidelity. So typically the easier process is to do it as a cash transfer. So you would liquidate. If you do want to do it as an in-kind transfer, an additional step would be needed to open up new accounts at Schwab under the name of the restated plan. And then we can help prepare the paperwork to prompt Fidelity to go and retrieve those assets from Schwab. Fidelity's prerequisite is that if they're retrieving assets from an external account, the name on the external account, so the name on the account at Schwab, would need to be the same name as the plan at Fidelity. So that's why you'd have to first open up a new account at Schwab under the name of the restated plan, move over the assets to the new accounts, and then tell Fidelity to go and retrieve them from those accounts at Schwab. For this backdoor Roth, what's the total you can put in after you do a $23,000 Roth contribution for the solo 401k Roth? Well, so you can, assuming you have the self-employment income to justify it, assuming that you didn't make any other types of contributions to the plan, you could contribute an additional voluntary after-tax contribution up to the overall limit. So for example, for 2024, the overall limit is $69,000. If the individual made a $23,000 employee contribution as a Roth contribution, and they didn't make any other types of contributions to the plan, and they had at least $69,000 of voluntary after-tax, $69,000 of self-employment compensation, they can make an additional $46,000 voluntary after-tax contribution, which will go into a separate voluntary after-tax account, and then gets moved over to the Roth account. So at the end of the day, they got $69,000 in their Roth solo 401k. So it's going to be based on W-2 wages in the case of a self-employed business taxed as an S corp. So if the person has $69,000 of W-2 wages, they can put in $23,000 as an employee Roth contribution, assuming they didn't make any other contributions to another plan like a day job plan, and then they can make an additional $46,000 voluntary after-tax contribution, then move the money from the voluntary after-tax account to that Roth solo 401k account. So in that case, it's going to be best to go and tell the bank that the IRS system won't issue an EIN number with a special character like a colon, right? The analogy would be if someone's name has a colon in it, like Patrick O'Leary, the IRS system is going to print their name without the, I should say if someone's name has an apostrophe in it, like Patrick O'Leary, the IRS system is going to print their name without the apostrophe. But that person is not going to have to go and change their birth certificate to satisfy the bank to remove the apostrophe from their birth certificate. They're just going to go back to the bank and say, it doesn't have an apostrophe because that's the limitation of the IRS system. Doesn't mean that the name is wrong. So it's better not to feed into that misunderstanding of the bank. It's better just to explain to them that that's how the IRS system works. And therefore the name does match. No, we do not hold or provide investments. We're not holding or providing our customers' accounts. We're totally neutral, though. We're very proactive in helping customers open up accounts at the bank or brokerage of choice. So yes, that's another, that would be a more typical reason why someone might have an LLC that's owned by their solo 401k, because they want to invest in alternative investments like real estate. So in that case, that LLC that's 100% owned by their solo 401k, the sole member is the solo 401k, the manager is the solo 401k participant. It will have its own EIN number. And then the individual, as the manager of the LLC, can open up a bank account under the name and EIN number of that LLC and then fund it from the solo 401k, the Roth solo 401k account. And then they could proceed, for example, if they want to invest in crypto, open up an account at a cryptocurrency exchange under the name of that EIN, the name and EIN of that LLC, then fund that crypto account with fiat funds, with US dollars, for example, from that LLC bank account. If SEP IRA transfer to solo 401k is not reported, then it will turn into a taxable event. The Fidelity rep stated that the transfer out may be classified as a taxable event since they have no visibility into the not-a-prototype account. Does this sound okay? No, it doesn't. Typically, when you're initiating a transfer from an IRA, you're going to submit a rollover form to the IRA provider, where you're letting them know that the transfer is a transfer to a qualified plan, a 401k in this case, so the IRA provider needs to report the transfer to the IRS, and then that'll be good documentation that you told them it was a direct rollover. So the expectation is that when they ultimately issue that 1099-R, the IRA provider, the following year, that they issue it as a non-taxable direct rollover with a code G in box 7. And if they end up making a mistake and say they issue it as a taxable transfer, you can go back to that rollover form and have them correct the 1099-R. Can I just open a pre-tax bank account for 2024 due to low income of Corp and open in 2025 the Roth? Most definitely. Yeah, there's no requirement to have all the different accounts opened up at the same time. Any difference with using standard bank account versus brokerage for crypto investing via solo 401k transferring to exchange? Yeah, some based on experience and client feedback, some brokerages like Fidelity, like Schwab, were not allowing customers to wire funds out of the brokerage account that was open for their solo 401k, say to an account at a cryptocurrency exchange. So that's one reason why a lot of individuals would choose to open a bank account under the name of their name and EIN of their solo 401k and then fund the cryptocurrency exchange from the bank account. Another reason is because they may want to store the cryptocurrency keys in a physical wallet, and then that's where that physical wallet would need to be stored in a safety deposit box associated with that bank account. All right, well, it looks like it takes us to the end of the questions for today. Thank you so much for the great participation. We'll give it a second to see if there's any more questions. So it's not clear if you have an IRA or a solo 401k at Rocket Dollar. Sounds like it's an IRA. Sorry, it looks like I missed that. So if it's an IRA, the question is going to be, okay, do you have an IRA LLC? If it's a Roth IRA investment, you're not going to be able to transfer it to any type of 401k, including a solo 401k. If you have your investments, self-directed Roth IRA investments, we're not an IRA custodian or trust company. Now, we do offer an IRA LLC where we facilitate that IRA LLC investment. This is how people have checkbook control, for example, over their Roth IRA investments. So the structure, in short, is they have a Roth IRA invest in an LLC, and then the LLC makes the investment. This allows the individual to act as the manager of the LLC and therefore have checkbook control. So the vast majority of our Roth IRA customers use Forge Trust, Forge. So you can reach out to Forge as a possible replacement if you're looking for a new IRA custodian. It needs to be under the name of the plan. So what's on the adoption agreement, what's on the trust agreement. As we talked about with one of the other questions, sometimes there can be some small differences with what's on the EIN letter, right? If there's special characters, for example, in the name of the plan. Or give it a moment to see if there are any more questions. All right. So most definitely, let me pull up the link for that. We sent you a link over here just a moment ago for scheduling a phone call. Please check out that link with the procedure, and then it's got a link to prompt us to help you open up accounts. All right, until next time, everyone. Thank you so much for the great participation.